Very good evening to all of you. On behalf of Auditing and Assurance Standards Board of Institute of Chartered Accountant of India, I welcome you all in today's 161st CP program in the form of webinar organized by Auditing and Assurance Standard Board of ICI. As we have covered all these sectors, today we are going to cover a very important sector, that is the fintech companies and mutual fund companies. And in order to tackle this very important sector and taking care of the key consideration in audit of the same sector, we are having with us C. Nilesh Khemka. So on behalf of AASB of ICI, I extend my warm welcome to you, Nilesh ji. Namaste.
Thank you,
We
sir.
are having with us very respected, very elder, very senior from our profession, C. Anil Kumar Gupta ji, as a moderator for today's webinar. So thank you so much, Anil sir, for giving your kind consent to moderate today's webinar. Welcome to you, Anil sir, also on this AASB platform. Thank you so much, sir. So without wasting much more time, I request respected Anil Kumar Gupta sir to please start the proceedings of the webinar. Over to you, Anil sir, please.
Thank you. I am very much thankful to Sri Sanjeev Singhal and Mr. Doshi for giving me this opportunity for moderating this event. Mr. Nilesh Khemka is a good friend of mine and is a chartered accountant with great experience in having expertise in IFRS, US GAAP, Ind AS, IGAP. We are taking constant instructions and guidance from him also wherever we are feeling wanted. He has a good experience of 12 plus years and he is a director in Ernst & Young. I believe his deliberations will help all the members for in the respective field. And I invite now Sri Nilesh Khemka for his deliberations.
Thank you, Uncle. Thank you, Anilji. A very happy new year to all of you, to both Anilji and support team. We have two Anilji today.
Yes, sir.
So, thankful to AASB, Sanjeev sir, and Anilji for inviting me occasionally for sharing my knowledge or increase my knowledge maybe, because for these seminars and webinars, I also got a chance to read new topics to sharpen my knowledge. So today's topic, as requested by Anilji, to be unique and something which we have never discussed or maybe discussed maybe a long time ago.
Very partly.
So key considerations while we as an auditor deal with fintech companies or mutual fund companies. Now, fintech is not very new, but yes, it is new. So let me just share my screen and then we can start the today's deliberation to be more meaningful. So is my screen visible?
Yes, sir. Make it full screen, sir.
Yeah, sir. Doing. Yes. So
yes,
fintech.
Sir.
Fintech means financial and technology. So we are all versed with financial sector, technology sector. Now fintech is where we have combined both of these sectors. And as the name suggests, it is some kind of innovative technology which is used primarily to provide financial services. So during the course of this discussion, we will see the importance or the key responsibilities of an auditor for this fintech and mutual fund sector is to largely take into consideration the aspects or various nuances of technology, because these sectors use cutting edge technology which provides faster solution. This sector are very agile and innovative. The revenue breakdown or revenue stream for both of these sectors very geographically. Like if we talk about fintech sector, we have subscription based model, we have interest income, we have brokerage, we have commission, we have buy now pay later scheme, that is again a sort of EMI. As we have seen in the last decade, the technology has disrupted the whole market. We will see how this fintech sector or the fin technology is different from the traditional technology, be it cost saving, be it flexible, be it providing faster solutions, be it user friendly. These fintech companies, you must have, or I would say everyone is using the products of fintech companies. Like we are aware with the PayU, we are aware with the Razorpay, we are aware with the Paytm, the largest fintech. We are aware with the Pine Labs, right? So all of these companies, in one or the other way, is part and parcel of our today's life. So talking about the term fintech, it means the innovative technology or the advancement of technology which is being used to provide or improve the financial services sector services or products, right? The primary goal being the efficiency, as I talked about, the accessibility, and the foremost is the user experience. The APIs being used, the apps being developed are all taking care of the comprehensive user experience. We have seen strong exponential growth. Very recently, Razorpay has moved its headquarters back to India. Before that, Pine Labs has shifted their headquarters in India. Both of them are eyeing for an IPO within India, right? So we can say this sector is growing leaps and bounds. They have attracted hefty investment from private equity houses, from other investors, from large venture capital funds, right? They provide a range of financial product and services which promote financial inclusion among the users, among the participants, among the participate companies. Now, if we talk about the regulations, in case of traditional manufacturing companies or trading companies, we have seen the regulations like the Companies Act being applicable on all the companies, income tax, and some other PF, ESI, and all. So these are the traditional laws which are applicable on all of the companies. What is new in the case of fintech and mutual fund companies is we have IRDA regulation, we have Information Technology Act, we have RBI regulations being governing the fintech companies, we have SEBI mutual fund regulations, we have uh, anti-money laundering regulations, we have other regulations as well, which we'll see in due course of time. So, as I mentioned, the sector is very prone to agility and its innovation because one success factor for the fintech companies is how frequent they can change their products, they can innovate new products, right? So, what typically fintech companies are doing, they are combining their technology with the financial institutions or banks or NBFCs and providing the user with a unique way or a unique experience to get the transactions executed in fraction of a second. They are using cutting edge technology to provide that experience, be it artificial intelligence, machine learning, the concept of blockchain. They are providing solution to very complex problems and personalized service at a very scalable level. If we talk about traditional technology or the traditional financial technology, one of the limitation was the number of transactions or number of the users or the transaction per fraction of time, which is not there in case of fintech companies or the software which are being used by these fintech companies. We can use data in trillions of TBs. It's a data driven decision making. Numerous of data is being collected by these companies and stored very safely. Since the data is being collected for each and every transaction of the user, there comes the regulation with respect to right to Information Technology Act to safeguard these informations. And here comes the role of auditors to ensure these companies are being are complying these regulations, be it information technology, or be it RBI various regulations, be it various regulations of SEBI, apart from other traditional regulations, right? So I will be covering these new regulations majorly in these slides. Then one of the core characteristics is customer-centric approach. They operate with a view to focus on the customer, on the specific pain points of the customer within the financial service industry. How to overcome or how to provide the solution in a timely manner, which should be secure, which should be promptly used by users so that real world can experience the solution of these problems. They are known for development of newest technology to to provide the users with the solution of their uh, newest problem or newest pain point they can experience they are facing in the financial services industry, which is largely which is largely in line with the payment mechanism. If we talk about the products and services which generally fintech companies offers are digital payment platform like PayPal, Venmo, and there are various others. They provide their platforms for an user to initiate and complete the transaction with peer-to-peer transaction, online purchases. We are purchasing, let's say, on the Amazon site, and there maybe Pine Labs or PayU or some other fintech companies providing the payment gateway services or the payment platform where this transaction gets executed on the Amazon app through the platform provided by fintech company. They connect the Amazon app to the banking server and banking systems where the transaction is initiated on the Amazon app. It is completed on the bank server, and whole the underlying architecture or underlying infrastructure is being provided by these fintech companies. The role of the auditor here is to see how these reconciliations are being done, because at one point in time or on a cutoff date, the amount is being reflected in the fintech companies' books. There also there are guidelines that the amount has to be deposited in a restricted escrow account or nodal account, right? There are sometimes the customer uh, cancels the order, then refund amount, there has to be a reconciliation, right? So this reconciliation is very important for these fintech companies because the whole of the revenue of these companies is dependent on this particular reconciliation. Because once the reconciliation is being done by bank, the other is being done by Amazon. In our example, the one is being done by these particular fintech companies, be it XYZ, and based on that, the percentage of the revenue is being received by these fintech companies. Peer-to-peer lending, here the short-term loan are being given to the customers or the users. Then they also deal in cryptocurrency, insurtech, uh, online platform for insurance like Policy Bazaar is very famous nowadays. Then there are companies who help in claim processing online. So these are the various products of these fintech companies. The understanding of these products and services is very crucial for us as an auditor to understand the nuances and to deal with the uh, observations or the uh, I would not say only observations, to deal with the peculiar situations, so that the certificate, if we are giving as an auditor under any of the regulations, or we are commenting that particular fintech company has complied with all the regulations and so on, for those certifications and our comment in the audit report, it is very important we understand all these products in detail, in and out, to understand how and what could go wrong in each of the product. Because all of these are technology driven, we need to understand the architecture behind it. Obviously, we as an CA may not be equipped enough for that knowledge. We need to have data engineer with us as a team member in the audit team, or maybe the IT team will obviously look at all these aspects. Uh, basically, the products which we just now discussed are also the revenue stream, right? There is no difference in products or the revenue stream. Why this slide is to show how the financial sector is growing. It is estimated to reach $70 billion by FY23 within India. Digital payments, or let's say the UPI transactions, I think it has crossed or it is about to cross 200 billion transactions, right?
Great. Great.
So this 70% of these transactions are being governed by fintech companies, at least in India. Then if we talk about credit, the SME lending is at forefront, retail lending, buy now, pay later, term for EMI, right? These are some of the very prominent solutions or income charging aspect for these fintech companies. If we talk about globally, the fintech revenue is projected at 30 billion by 2030 in the Asia Pacific region, out of which we can see 70 billion is expected in the FY30 in India only. This was all about fintech, the architecture, governance, importance of fintech company. Now the mutual fund company. What is mutual fund? We all know we must be doing SIP, we must be doing one-time investment. The core objective of mutual fund companies or asset management companies is to maximize return of their investors within a convenient and affordable way by minimizing risk to the invested principal. That means the fund managers have to devise the strategy to invest fund in a way so that there's a diversification of fund, some in equity, some in debt, combination of equity and debt, within equity, which companies to choose, which to exit. That is all about investment strategy. There is a pool of fund where the money is brought in, money is taken out by the investors. These are open-ended, close-ended, actively managed by fund managers. Investment objective is only one: to maximize return, be it in the form of dividend, be it in the form of growth. In the growth, they can get additional units, be it in the form of income distribution, where quarterly dividend is being given. It can take any other form, but the heart is the heart is lying in maximizing return to the shareholders. Regulatory oversight, as I mentioned, these are being governed by SEBI, as we talk about the mutual funds. Now, within investment strategy, as I was talking, one is equity investing, which companies to choose, when to exit, fixed income investing, debt securities, balanced investing, some in equity, some in debt. Sector specific could be there, how much portion in auto, how much portion in technology, oil and gas, financial sector, and key activities which these mutual fund uh, do, or they are involved in, are managing the horse portfolio, doing continuous research to identify newer sector, newer companies to invest in, and so that they can take the informed decision, or they can make informed investment. Managing risk through diversification, they could use financial instruments or financial money market instrument like hedging and other strategies. Then they provide continuous support to the customer. If we talk about the revenue earning lines for mutual fund companies, are obviously management fees they charge from the investors, performance fees, distribution charges, yearly administration charges, and maybe custodian fees, audit fees, and some other charges could be levied. Major being the management fees.
Correct. Correct. Correct.
Now, as I mentioned on the first slide, the fintech as a term or as a sector differs from traditional financial technology. The major gap being this fintech is only focused on the financial services, whereas the traditional technology or the traditional financial technologies was relying on the general purpose enterprise software. User experience is of key or prime importance in case of fintech, because the app which is very easy to navigate, user will prefer those. If I were to choose between Zomato and Swiggy today, so more of our cashback and discount, I will look the easy navigation within the app. How can I locate my profile, my past history, my orders, how quickly I can order, I can choose the product, and how quickly I can make the payment on the app. These are some of the features. Beside, there could be many others. So this is the experience, or this experience will have a impact on which app I will be using. Likewise, Amazon, or let's say Flipkart, or there could be others, right? So this user experience is of very supreme importance, because the app which is very easy to navigate, or the which can uh, potentially uh, have an impact on the minds of the users, user will definitely choose on that aspect. So user experience priority is to build an app where the API connections, where the integrations with the banks, the fintech companies, or let's say the vendors is running seamlessly. Agile and innovative, we have already discussed. This is cost effective approach. This is cost effective software being developed very quickly, apart as compared to traditional financial technology, and it cater to various transaction. If we compare to traditional financial technology, it caters to enact multiples time of transaction in a fraction of seconds. Let's take an example of Zomato, or let's take an example of Blinkit. I was just seeing today's post from Alvinder, or maybe yesterday's post, today's too. So they have delivered, I think, 5 to 10 lakhs of order on the 31st December within the last 1 hour. Now, the payment for all of these orders would have been done online only by using the platform or the infrastructure developed by these fintech companies. Now, there 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 were scenarios, or there 100% there are scenarios where lakhs of orders being executed on a particular fintech company's infrastructure within a fraction of time, maybe 2 3 seconds or 5 seconds. So we can see the scale of transactions these fintech companies are executing very effectively and efficiently, with very, very less chances of being denied or failure. So this is the core difference between the traditional financial technology and the fintech sector. Now, the regulations. What regulations govern functioning of fintech or mutual fund? Reserve Bank of India regulations. So as a term, fintech, it takes money, it gives money. So payment and settlement system. It governs payment system, including digital payment. So the regulations of these act has to be complied by all the fintech companies. As an auditor, I need to ensure the regulations which are being mentioned in the Act 2007 are being complied by the company. I am not required to test the compliance. If a company has taken a services of any IT company, we can rely on that report. Besides doing our part as mentioned in the respective standards on auditing. But whether company is complying with these regulations or not is the duty of the auditors. Second is RBI guidelines on digital payments, RBI guidelines on peer-to-peer lending. Then if we talk about SEBI regulations, we have AIF Fund Regulation 2012, we have Portfolio Managers Regulation 2020, which is for mutual fund companies. Then we have separate regulations from IRDAI regulations 1999, specifically for insurtech companies. Then Ministry of Electronics and Information Technology regulations, Information Technology Act 2000. The one who has done ISCA in the CA interest syllabus, they must be familiar with this. And the other regulations being anti-money laundering, know your customer, whether the company is compliant in KYC norms or not. Again, these are all non-financial regulations, but holds an importance while we do the audit of fintech companies or mutual fund companies. Other regulations which are governing mutual funds are the mutual fund regulations of the SEBI, SEBI Mutual Fund Regulation 1996, investment advisor regulations, alternative investment fund, we have already discussed in fintech companies. Then other regulatory guidelines, SEBI guideline on mutual fund, investment advisors, financial inclusion. This is about the guidelines from RBI on the penetration of mutual fund in the rural areas. That means how to include rural areas within the financial services sector, more specific to the mutual fund. There are various industry associations which have impact on the working of mutual fund. The key are Association of Mutual Fund in India and the Mutual Fund Advisory Committee. They keep on doing research, discussion, and then provide various recommendations on the working of mutual funds. So we need to see if any of these recommendations are being issued during the audit period, how the company has complied with, or if not, then what are the reasons. though these are not mandatory but recommendatory. So doing or not doing, there should be a justification for that. Then apart from these, the regular laws, Companies Act, Income Tax, GST, Anti-Money Laundering and KYC already discussed. These are also applicable to fintech companies. Now the checklist. What should be the auditor's key areas to focus while doing the audit of these fintech or the mutual fund companies? So regulatory compliance, we have already discussed all the regulations which are applicable on these fintech or mutual fund companies. We need to ensure compliance. Data security and privacy. Since it all relates to technology. See, in case of either fintech or mutual fund, less of a paper, but more of a technology. It's all digital. A term like it's all digital, it's very true, because from start to end, you need not to sign papers. If I were to today take an SIP or invest in mutual fund, I think I don't even need uh, to use my laptop. I can do it on my mobile only, and I think within a process of 2 to 3 minutes, I can securely invest in one of the mutual fund scheme, provided my this PAN card, Aadhaar card, all are interlinked, the names are matching and all, right? So we can not assume how much transactions are being done within a minute or within a fraction of time. Likewise, on any of the app or website of a fintech companies, we can't assume how many orders are executed, how many payments transactions are being felicitated within a given period of time. So we enter so much of data while we execute this transaction: PAN card, Aadhaar card, mobile number, ATM card number, credit card number, blah blah blah, what not. Now this data is being captured. What do these companies do with this data? They need to securely keep this data for a given period of time. And here the cyber security, data encryption, data protection, GDPR laws come into picture. So data protection compliance, it says the company needs to comply with laws like Information Technology and Data Protection Bill. Ensure that the personal data which is being kept, captured or handled are safe and secure on the cloud. They are taking consent from the user for data collection. Generally, we get a tick mark mandatorily which says you consent to use your data for blah 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 purpose. That is due to this act, ensuring data accuracy and allowing access and correct the data to the users. Implement privacy policies that highlight how the data is being collected, it is
Are,
stored, used, and shared.
are we supposed to audit the data protection facility and data protection compliances also?
We need to ensure all of these laws or act are being complied by the company.
Okay.
Obviously, we as an auditor can't do. So company has to get these audited, all the systems, all the information technology platform from some reputed organizations who are specialized in IT audit. And that report we have to see whether
Yeah.
the scope which was covered in the audit was in compliant with these regulations, and the result of that audit.
Okay.
Yes.
Sorry.
Cyber security audit. Regularly, these companies have to get their systems audit for the cyber security scams, perform regular vulnerability assessment, that data is secure, the systems are secure, the online platform or the infrastructure that this company has developed or they are in the process of developing, they are secure. This involves scanning the network, application, all the systems to see if there are any potential trial of cyber attack or they are prone to any cyber attack or not. Or if they are being cyber attacked, then what is the number of times or what is how frequent they are being attacked, what is the security walls they have applied, how powerful are the security walls. In compliance with PCI and DSS standard, again these are payment card industry data security standard. uh, this comes into picture for a credit card companies where we are paying through the credit card. Our whole of the data is being collected by that particular app or website, whether they are using encryption access control or not, whether regularly monitoring of these payment systems are being done by the company's in-house IT department or from the outsourced IT department. Then if we talk about technology infrastructure, the architecture which these companies have built, it involves the continuity plan or the disaster recovery plans. If let's say the technology or the infrastructure which these companies have built collapsed, what is the way out for these companies? This can be related to a going concern, right? If the companies are not able to restore their technology or restore their infrastructure, they can be there can be a going concern issue because this technology infrastructure is their business. If the technology is down, we have seen very recently the Microsoft server was down and there was hue and cry across the globe. All the airports were shut, no flight could take off, right? Now assume if that situation lasts for 2 days, 3 days, 4 days, the amount of loss to the industries, and there are various industries involved. The same applies to here also. Let's say there is a company who has provided the infrastructure platform and they are joining the, let's say, one of the fashion industry app with the various banks. And if that bridge in between get collapse, both the ends will not be able to meet, right? We have seen very recently while Paytm was blocked or Paytm was denied to transact, right? For various days, there was no bridge between various banks and the companies to take care of the transactions, right? So this disaster recovery plan is in what amount of time they can restore all the functionalities, all the architecture. Now, system can fail maybe due to natural disasters, cyber attacks, or there could be normal system failure. Right? This is part and parcel of the technology. Backup systems are in place or not. If they are in place, whether they are functional or not, whether automatic backup is being taken or not, what is the secure offsite storage to prevent data loss. So all these points individually we are not required to check, but we need to ensure all these points are being taken care while the system audit has been done. Internal control, yes,
Correct.
we need to evaluate the control framework to prevent fraud and ensure accurate financial reporting. I think we are doing on all of the audit clients, ITGC control, access controls, right? Then we need to maintain robust internal control framework, the policies, the guideline, the procedures to safeguard all the assets, all the technology, all the data, and prevent fraud. We need to conduct regular internal audit to ensure effectiveness and efficiency of these technology infrastructure. Now, while the internal audit of this technology companies are being done, we need to cover all the aspects, financial, operational, and other compliance and regulatory requirements. Third party risk management. If any of the work is being outsourced to some vendors or partners, then we need to ensure the same set of regulations are being uh, checked for these third party vendors also. We need to perform due diligence on the third party vendors system with respect to data security, with respect to cyber security, with respect to stability, with respect to data loss, and anything. Customer protection, what all we have just now discussed is about the company's infrastructure or the company's gathering of numerous data. Now, here it is only related to customer protection, how the customer is being protected, and how these companies are ensuring transparency while doing the transaction and after that. So it says we need to maintain transparency while data collection and its after use. We need to provide clear and accessible privacy policies that the transaction which is being facilitated on the company's technology platform is handled very securely and privately. There could be legal and regulatory requirements around these, like uh, what is the security measures the company is doing while the transaction is being executed, whether the company has implemented detect and report breaches or non-compliance issues. Now, the certificates which an auditor has to give for all of these regulations which are being applicable to fintech or the mutual fund companies. Like in case of RBI regulations, the payment system operators may be required to give certificate to RBI confirming that the particular company is complying with these payment system regulations or peer-to-peer lending platforms. In case of SEBI, we need to give certificate for AIF funds regulation confirming the compliance, or the portfolio managers or the mutual fund regulations or the ICFR. With respect to IT and data protection regulations, on the Cyber Security Act, on the data protection compliance, others being SOC 1, SOC 2, ISA 3402 report on the design and operating effectiveness of the internal controls within that technology or the infrastructure architecture which the company has built in, or on the anti money laundering compliance or know your customer compliance. It's all digital. Yes, it's all digital. So areas to consider here are verification of transaction, maybe on a sample basis, whether they are accurately recorded, authorized, and settled or not. Payment processing, we can review the company's payment processing system, including all the APIs, payment gateway, to understand end to end linking and the recording and transferring of the data and the execution of the transaction. Platform testing, we can check functionality, we can check processing, inventory management, and shipping integration, whether the inventory being recorded through these apps or robots is tying to the physical amount or not. Then ITGC control we have discussed. We need to test ITGC control, data encryption security, access control, network security. The firewalls are being applied at the uh, cloud level or at the host level. Data analytics and visualization. If there are systems or there are technologies used to visualize the data, we need to see and ensure the completeness and accuracy of the data, how consistently the data is being pushed from the main server. We need to assess the use of analytics and machine learning algorithm if the data is being used in the financial modeling for budgeting and forecasting purpose. Then there are various audit tools and techniques to extract and analyze data. In automated testing, we can deploy tools to simulate the transactions and test system controls. We can leverage cloud-based audit tools to facilitate auditing and collaborations. So these are some of the steps or techniques while we perform the audit in a digital scenario. And these two slides are not only limited to the financial sector, fintech sector, or mutual funds. Majority of these steps or these approach points can be used for all the given companies, because in today's scenario, I think every company is technology savvy. Every company is being catered by, let's say, any of the ERP, maybe Navision, SAP, or other forms of ERP softwares. So these can be highly useful. Regulatory compliance, we need to evaluate AML and KYC as required by these respective regulations, right? IT and cyber security, we have already talked. Emerging technologies, the concept of blockchain technologies, right? We can evaluate the company's use of blockchain and how these are being distributed on a technology level, smart contracts and cryptocurrency transactions. Whether the company is using AI and machine learning, what are the risks associated with that, what is the data quality. Now, some sort of accounting and auditing issues. Primarily, there are three, four accounting standards which are applicable, or I would say majorly these are applicables like IFRS 15 or Ind AS 115 on the revenue recognition. Then Ind AS 38 or IAS 38 on the intangible assets.
Okay.
Then financial instruments on the IFRS 9 or Ind AS 109.
Right.
Then leasing on the IFRS 16 or Ind AS 1116. Why these are important? Because in
Right.
case of revenue recognition, we need to see for each of the business stream or revenue stream, when is the uh, obligation completed or risk transferred, when is the company has transferred or completed its obligation. At that point in
Right.
time, that revenue has to be recognized. Like I mentioned, in case of a transaction being executed on the Amazon site, connecting the Amazon app with the bank server, where this transaction get executed on a company's infrastructure or a technology built in by a company, the backend platform. Now, at what point in time I can say the company is eligible to book revenue? Once the transaction is complete, once the transaction is being pushed by the company from the Amazon to the bank site, or once the reconciliation is being done. So there could be various industry practices, right? Then if that order can be cancelled and amount can be refunded within, let's say, 3 days, whether that 3 days period would be considered or not. So it all depends on the arrangement. And within this arrangement, there are multiple parties. One is Amazon, one is the fintech companies, then banks. If this payment has been done by the credit card, then the credit card company, right? The customer. So there are various parties to this. And that's why it is very complex while the revenue recognition comes into picture. The other being financial instruments. Now, these companies, since the amount or the funding is being done by various venture capital fund or the private equity funds, the amount or the money comes in various form, maybe loan, maybe investment, maybe other forms of loans and investment. The classification of these financial instrument, again, a matter of judgment, and depends on the terms which are being included in these agreements where the funding is being done. Second aspect within this is the assessment or adequacy of the expected credit loss or the provisioning, whether the amount is secured or based on the credit rating, the one who has given loan need to provide for some amount or not. Again, the this totally depends on the judgment and the estimation areas uh, uh, which are prevalent during that course of time. Leasing. So we have seen Pine Labs POS machine at various vendors. So there are various models to that also. One is they can sell the machine, they can charge rental, or they can have different arrangements, right? So again, where these are being given on the rent, the lease accounting has to be done by the company, and the lesser accounting has to be done by the fintech companies. Taxation, it is all neutral, like income tax, GST, or other indirect tax, or withholding tax implications. When we talk about regulatory compliance, these companies has to comply with the Ind AS or Indian GAAP as applicable, Basel 3 or Basel 4 norms. More importantly, for the fintech companies, mutual fund guidelines, including requirement for NAV calculation, how the NAV is calculated across industry. We need to compare with the peers. We need to compare companies' calculation on a quarter-on-quarter basis, whether they are consistent or not. Right. So these are some of the issues which we need to consider. Financial statement of audit NAV calculations we have considered. We need to consider the fact like market fluctuations, the dividend which the issued by the or announced by the companies where mutual fund holds shares, whether they have been accounted for or not, right? Whether the investments or liabilities are correctly classified or not. So these are some of the key accounting and auditing issues. Then intangible asset is important because these companies many a times uh, develop their in-house software or in-house technology. Now, in-house software or in-house technology can be capitalized, but it is very judgmental and principle-oriented thing. We need to see what was the desired outcome, what is the outcome we have received, what was the research phase, because during the research phase, in any ways, any of the amount incurred has to be charged to statement of profit and loss account. It is only after the research phase, when the company enters in the development phase, the amount can be capitalized. Now, if we are doing this in-house, it is very hard to prove the cutoff date from the research and development phase. Within development phase, how to quantify that amount, because there could be some employees who are working on various projects. There is an employee who was dedicatedly project. How to allocate the time of senior management, how to estimate the other resources time, right? So again, the companies are doing this, and but it involves challenges. That's why I said India's 38 or IAS 38 is very crucial in the case of these fintech and mutual fund companies, because day in day out they are enhancing their technologies. One peculiar case could be the technology is already there, they are adding some functionalities. Now, whether that will pass the test for India 38, there could be additional revenue, there could be additional customers or not. Whether I can say this as a new software, or this will not fit in. So there are various nuances to that. So what we need to see this profit and loss account very carefully. The IT cost, the research and development cost, the amount capitalized within intangible asset, right? Company may be charging their cost which should have been capitalized, or vice versa. So these three, four heads are very important. Or let's say royalty payment. Let's suppose there is a expat who has come from, let's say, the Japan, or the parent company, and he's helping out building the technology. So there could be a royalty payment to that, or there could be increase in the salary cost, right? So these are the cases where we can come to know whether any work is being done, or the work is in progress on some of the technology aspect or not. Then going concern assessment, we have discussed audit of service organization. If company is using, let's say, company has outsourced the development of that particular software to third party, right? Then we need to take the service organization report, which says SOC1, SOC2 report, that all the software that this company is employing and the software which they are being developing for us, they are all complying with all the regulations which we have talked now, just now. So yes. Now, the last one being the auditor's approach. This is in line with the standards on auditing, where we are doing the planning and risk assessment, and what are the audit processes. So we need to understand the business model, entity's business model, without which I think we will not be able to do audit. And once we have the clear understanding of the business model, we can identify the risk associated with that industry. We can assess the IT infrastructure which the company is using, including its hardware, software. Then the audit procedures could be performing the transaction testing end to end of all the systems, all the APIs, all the apps, and anything and everything where the company has connected its infrastructure or technology infrastructure to provide the user with the execution of these transactions. The IT controls, be it ITGC, be it access controls, compliance testing, all the RBI and SEBI regulations, data analytics. We need to audit the trends and anomalies, and we can identify the risk. Like I mentioned about the unusual trends in the, let's say, employee benefit expense, or IT cost, or let's say research and development. That could be starting point to engage in discussion to understand the fluctuation, and therein you can uh, get the points to be considered for the further audit. NAV verifications, again, the peer comparison, the company's comparison from past years or past quarters, to understand whether there are any changes to the calculations. Also need to check the latest regulations, whether the regulations has been changed or not, because SEBI nowadays are issuing various regulations for the various industries. Like they have issued for the SMEs, they have issued very recently for the listed entities. They keep on doing changes in the LODR, right? So as and when we are doing auditing, we need to at least see these regulations and the calculations as per the regulations are there or not. Then specialized audit areas like cyber security, data privacy audit, anti-money laundering, data analytics, regulatory compliance with AMLP or KYC. Again, why these are important? Every regulation is talking about. I have talked about 3 4 times is because of the fintech company and the mutual fund companies are running on the platform on the digital platform. They start to end is digital. So it is very imperative for these industries to use secure technology to see how they can avoid cyber attacks, how they can apply data privacy policies and ensure data privacy of the collected data. One thing we must do is continuously seeing the updates in the technology industry and the fintech industries from the regulators, from the industry associations, or from the global associations or global reporting frameworks. Because as and when there is any change in any of the regulations, in any of the act, it can have manifold repercussions. Because if there's a new regulation to get these technologies or system being employed by these companies to let's say provide a specific report on any of the aspect which was not covered earlier, right? All the systems will get covered, and you need to test all the systems for that particular regulation or for that particular compliance historically. Collaboration with the expert, we can collaborate or we can have a cyber expert in our team who is also hands on the data analytics or other regulatory compliance, so that we can frame a comprehensive audit approach covering all the aspects which we have discussed till now, and do our audit thoroughly and ensure that all the regulations, apart from the financial statements related, the other aspect being the operational technology and other governance point of view, the company is complying with all the major laws. Now, how the audit in the fintech or the mutual fund industry differs from the traditional companies or other industries. Again, it's all technology, it's all digital, it's a unique industry. It heavily rely on technology, and it makes the IT audit crucial. So one is the IT audit. We need to verify the accuracy and security of the digital transaction. Accuracy to theek hai, why security? Because data is being collected, whether that is secured or not. The data flow within that transaction through the multiple layers of the technology is encrypted or not. Mutual fund invest in a wide range of assets. We need to understand as an auditor all these complex investment products, because until unless we have understood the products and its nuances, we will not be able to conclude on its correctness of the reporting and classification and the valuation methods. NAV calculation we have discussed. Regulatory requirement. Again, mutual funds are regulated by SEBI and other regulatory bodies, majorly by SEBI. So we need to ensure all the compliances which we discussed on our third, fourth slide: the mutual fund regulation, the investor regulation, the inclusion, financial inclusion of the rural areas, right? Fintechs and mutual fund are governed by various bodies, RBI, SEBI, and IRDAI. And again, the traditional companies may not be covered by, let's say, RBI or IRDAI. SEBI, again, all the listed companies are being governed by SEBI, but we have seen we have not talked about the SEBI LODR regulation. We have talked about the specific regulation which are applicable to fintech or mutual fund companies. One key important is we need to be updated, the one who is dealing with fintech or mutual fund companies, because the regulations are changing very rapidly and there could be new guidelines as well. We need to have specialized skills like the knowledge of investment accounting and the valuation related knowledge, how the NAV is calculated, what are its constituents, what to include, what not to include, right? Regulatory aspect, the knowledge on the SEBI regulations, IRDAI regulations, the RBI regulations is must. Again, I have not included FEMA because FEMA is applicable to all the companies, right? The regulations which are being covered are the only specific which are applicable to fintech or mutual fund companies. Risk profile. We know when it is digital, it is more prone to risk due to cyber attacks. And here, we as an auditor are required to assess whether there are control at the server level, cloud level, or the infrastructure level, or the which layer of technology, right? Data privacy concerns. We have talked. There are various concerns about data leakage in the past. So now in Europe we have data protection bill also, which is also applicable in India. So anything and everything around the data, execution of transaction, collection of data, its storage, the what could go wrong could be cyber security attacks, the system failure, the leakage of data, or the data being not encrypted while the execution of transactions. These are all the key constituents of this industry, which we have to consider while we audit or while we initiate the audit for these industries or while we plan to audit these industries. It could be very helpful to engage in discussion with the internal auditor, what areas they have covered in their internal audit during the period, what was their scope, whether, or we can discuss with the management to include the uh, compliance with these regulations in the scope of the internal auditor. We can discuss with the uh, IT auditor if that is separate, what was the scope, what they have covered, whether they have encountered any cyber attacks during the period or during the earlier period, what was the remedy they have provided to the companies, whether subsequent to providing the remedy, whether there is any further further uh, uh, of such attacks of such type being noticed or being experienced by the companies. So these are some of the uh, approach points or the framework which we need to build before we start with the audit. We should have at least one IT specialist who is um, uh, having knowledge on the cyber attacks, the data visualization and analytics, data collection, its failure, all of these points, because it would be very useful to conclude on all the compliance of the regulations. Reporting and communications. Fintech companies may require enhanced reporting such as compliance report and risk assessment, which are, although they are required to compliance with the Information Technology Act, Cyber Security Act. Auditors must communicate effectively with stakeholders. Stakeholders could be anyone, including management and investors. So we have seen how these regulations play a key role in successful running of the business for fintech companies and the mutual fund companies. They've included so much in their compliance that I can't think of anything which can go wrong if all of these compliances are being followed diligently and they are being then audited by IT sector specialist, or let's say internal auditor, or companies in-house IT team, to prevent from the cyber attack, data loss, data privacy prevention, and all of these. So that was all from this presentation. Anilji, I'm happy to share the sorry, take the question.
There are your deliberations have been good, and I believe that by your deliberation, I have come to know that many things are happening in this world,
Yes.
and very fast. Means you young people can undertake such kind of activities. Means we may not be able to catch up with all the nuances and all these intricacies and doing fast things in a very exact way. I have got a
Right.
very good questions regarding custodial controls. How do you ensure that clients' assets, means a fintech company and a mutual fund company deals with other assets of the clients? Means they are getting payment from somebody, they are sending a payment to somebody, and say after some days or some hours, how they are being safeguarded, and what processes are there so that they ensure that segregation, the client's assets are segregated from company's assets.
So, sir, therein the SEBI and the RBI has included these regulations where it is on the company, or they have given the laws to comply by the company, and there we as an auditor need to check where company has complied with all the regulations or not. Like for the safeguarding of the assets, we have cyber security, we have data prevention law, we have data protection law, right? Now,
Right,
the one who will audit these softwares, right? The company is not doing these manually, they are relying on their technology. Now,
correct,
someone who will be auditing this architecture or the coding of that architecture will come to know whether I, as an Nilesh Kemka, has entered my details and I have, let's say, deposited 1 lakh rupees from my net banking of the other account. So, whether that is being separated or not, what is the architecture on that?
right,
Right, because agar if this is hard, if this is not being done on a digital mode, if this is done on a hard copy, I can go and check the register. But since I do not need to check one or two line, I need to check the architecture. So how this will happen is, if I were to audit this architecture, I will push 10 to 15 dummy entries and see whether they are being recorded separately or they are getting accumulated on one of the line item. Let's
right.
suppose they already have an account in the name of Nilesh Khemka, maybe some other. So when I am pushing my entry, so what are the differentiating factor where it gets distinguished from the other Nilesh Khemka and for this Nilesh Khemka? That may be
Right.
PAN, that may be Aadhaar, that may be various fields. So that has to be checked, and for that only these compliances have been made for one such objective.
And means they are getting payments from Swiggy, for Zomato, for Amazon, and all kind of things, and they are deducting their commission, and
No, no, no.
also
So they are
they are
not
also
deducting their commissions. They get paid afterwards when this whole reconciliation is being done. What they
so
do is, if I have paid 100 rupees from my account or my credit card, it will get deposited in the Amazon's account. Now, Amazon account could be in SBI, could be in SDFC, could be in any other bank.
okay,
Once this reconciliation will be done on a monthly basis, how much order were processed, what was the transaction value, bank will prepare its own reconciliation, this Amazon will prepare its own reconciliation, this fintech company will prepare its own reconciliation. Because out of these 100, 1 rupees or 2 rupees will the bank will get, 50 paisa this fintech company will get, balance the Amazon will keep it with them. And this amount has to be kept within a restricted account till now, till that time.
And also for mutual fund companies?
Yes. No, for mutual fund companies, what will happen? I will be doing this transaction on a, let's say, HDFC bank website or HDFC mutual website,
Right,
right? So what will happen? I will pay 1,000 rupees to invest in a particular mutual fund. That will
right.
straight away go to the HDFC. Now, whether HDFC is using its own infrastructure to complete that payment or they are using some fintech companies, it is their joint agreement. If that is using that third party infrastructure, then they can decide what is the percentage of commission they are giving to that fintech companies. In that case,
Okay,
my money is secure because I have paid to the HDFC.
okay, okay, okay. And how do we check the NAV calculations are performed and reviewed periodically to ensure accuracy and timeliness?
Right. So as an auditor, I need to check what is the formula they have used for calculation of NAV, right? Net assets value,
Right, right.
whichever is mutual fund is. Largely, it is the companies where this particular scheme has invested, their last reporting price, or let's say if I am doing the audit of 31st March, then the closing price of 31st March of all the companies, the number of shares where they've invested, and based on that, I will calculate the NAV. I will subtract the fund managers' commissions or subscription fees or any other expenses, and that is how I will come to know the NAV for that particular fund.
NAV will consider, see, there may be foreign companies or they may be certain
So,
other
so
assets or
whatever companies they have invested, whether it is Indian or foreign or debt securities or government securities, their last
liquid money.
reported price.
So their NAVs are calculated periodically, means on the close and close day basis, on the day close
Yes,
basis, on
yes, on
for
the close day
shares
basis.
and for all the securities.
Yes, yes.
Okay. And how do we check that they are being done timely, means
So, no. So, see, for mutual fund, they one of the NAV which they do is post closure of the market at 3:30 p.m. at the midnight, 8 or 9, uh,
they calculate
uh,
it
they show the NAV on the respective app or respective websites,
website. Okay.
right? That as an user, I cannot check how they have calculated NAV. But
Not as
as
an
an
audit, but as an
yes,
auditor, I need to check.
but as an auditor, I can check, I can take the detailed calculation. Again, this is being done digitally. So what I need to do is I need to again check the architecture of these
System.
calculations,
System.
how they are fetching, because they are not doing manually. If a mutual fund scheme has invested in 100 companies, what they have done is they have devised an API connection from the SEBI or from the NSE website where periodically it captures their closing price, right?
Okay.
So I need to check that coding.
Okay. Okay. You need to
Yes.
check that.
Yes.
How are risks associated with credit underwriting? One, algorithm trading. Second, and or payment processing are identified and mitigated
So again,
regarding
see, all of these are being driven by the technology. They have
okay
devised one or the other way to take care of algorithm trading, to do this credit. What was the first term?
credit underwriting.
Yes, credit underwriting. They have all devised their mechanism. So we need to check that technical algorithm they have built to cater to these products.
And payment processing risk is also
See,
notified.
payment processing risk is always there because one transaction in a lakhs could get failed, or maybe one transactions in every 10,000 could get failed. That could be due to various reasons. Maybe bank server was not responsive, or let's say there was a problem on the fintech company software side. There could be no response from the bank side. There could be various reasons. But
Okay,
technically speaking, the transactions do not fail nowadays very frequently.
okay. And another question is how to ensure adequacy of control placed by a fintech company to safeguard customer data,
Yes.
comma,
So
prevent fraud.
again, on this, we need to see how the data is being uh, captured and how it is saved,
App.
and what are the data protection uh, data protection what I would say,
Safeguard, safeguards,
not safeguard, the firewalls they have applied,
firewall
right?
development.
And as a dummy, I need to again I and we as a chartered accountant may not be the right person to do that. We can involve IT expert to pop up the cyber attacks, and we need to see whether the firewalls are getting activated or not.
Okay, okay, okay,
Yes.
okay, okay, okay. And are there any frauds involved? Have you gone? Have you experienced any fraud kind of thing like with the
Fraud,
customer data?
generally, I would not say fraud has occurred or not. See, this all happens maybe due to errors or mistakes normally, and
Okay,
frauds I have not seen or heard in these companies, like the one you are talking about, cyber frauds or something like that. See, we nowadays what is happening, we can get a call, maybe your parcel is there and all, and they can keep you engaged for a minute or two, and then what they can do is they can clone your mobile number, so that all the OTPs are being transferred to some other devices, and your phone will be a dabba for, let's say, 2 or 3 hours. So these tactics are there, but I would not say these are being done due to the technology of these companies. These companies' technology is very safe. What the fraudsters are doing is they are devising new mechanism to defraud these techniques.
yes. Do you don't you perceive a don't you cannot you assume a company from Jamtara taking cover of a fintech company?
Sorry.
Don't you see a possibility of a person from Jamtara making a fintech company and operating in the real time, operating in real world?
See, they can do anything. Technology, with the use of technology, we can do anything. It's the right approach is required.
And are the regulatory authorities are aware of some wrongdoers or some persons who can undertake such kind of activity? No,
Mm,
no,
very
not
hard to
found.
say.
Very hard to say.
Very hard to say.
Okay. Uh, are there any more questions regarding the deliberations which Nilesh has made? I believe Nilesh has answered the questions
Yes, sir.
which
Yes, sir. He
we
has
raised.
answered all the questions, sir. There is no other question, sir.
So can we can we go for Thanksgiving or
Yes, yes, sir. Yes, sir. Yes, sir. Let us conclude. So, on behalf of WSB of ICI, I extend my heartiest thanks towards the learned speaker Nilesh ji and a very respected C. Anil Kumar Gupta ji for sparing their valuable time. And I must say salute to Nilesh ji in spite of having the very urgent family emergency, some emergency in his family. He was not able to deliver the deliberation, but just for the sake of our members, he has said, no, I will take the deliberation in spite of having very emergent situation with him. So thank you so much, Nilesh sir, from the core of my heart that you have still delivered the deliberation and for the members and shared your insights and knowledge with all our members. So once again, thank you so much, Nilesh sir, for sharing your
Thank you, sir.
insights at this particular condition also, sir. Thank you so much.
Thank you.
Thank
And
you.
also thanks Anil ji for such a wonderfully coordinating today's webinar and sharing his thoughts. So thank you so much, Anil sir, for sparing your valuable time and giving your consent to moderate today's webinar and wonderfully coordinating the webinar. Thank you so much, Anil sir. Thank you so much, Nilesh. Thank you, sir. Thank you.
Thank you.
Thank you, sir.